need to learn Fathom in case in case you can't get some energy going, get some focus, find some sectors, a couple trades here and there. I want to also get into others of Tom's scanners as well. You know, Money Calendar works great. Darknets, aka Alpha 9, some of the other amazing scanners Tom's got. So we can get into that world a bit too. But I don't want to risk focus, so we've got to stay focused. I don't want anybody doing anything until they back tested it. But we can play around and look and paper trade and stuff like that, just to kind of get a feel for the systems, and maybe you see something you like. And so that's the idea that we have. Ultimately, we're going to broadcast that live, free, over Facebook, YouTube Live, and a few other social media platforms, and start putting this out to other people, you know, the general public, and get that into the options world. So that's what Snipers will ultimately be. But right now it's just us, people that are in hedge funds. So it'll continue pretty much as it is. We're just not going to do the group coaching anymore. That's one less hour and a half a week that you guys need to mess around with. So, all right, let's get started. It's top of the hour. Stock, crypto, and options trading has large potential rewards, but also large potential risks. You must be aware of these risks and be willing to accept them in order to invest in the stock, crypto, and options market. Do not trade with money you cannot afford to lose. And this is neither an offer to buy, sell, or recommend a particular stock, crypto, or option. Let's take a look at the markets. We were just celebrating what the markets have done. And I'm not, you know, so there's no detachment there, right? So I preach this detachment thing, but I just think it's fun. And now the market is behaving as it, let's call it, should, because of all the environment stuff we've been talking about, interest rates, recession, inflation, all that stuff. Markets should be dropping. It's what should be happening. It's what has happened historically. And now the world is acting as it should. The markets are. And so I feel much more confident about predicting direction than I have in a while. Here was nuts, you know, markets going bullish, and everybody, you know, the person that was really suffering through it was Andrew. I don't know if he's on the call right now, but you know, Andrew was livid. Oh, what's going on? It doesn't make no sense. He doesn't talk like that. And now it's behaving a little bit more rationally. The thing to note is that we've had 1, 2, 3 of the last 4 days. This drop has been accompanied by higher institutional conviction. So further downside looks likely. Where does it go? 390, 380, 370. Those are our stopping points. As it hits 390, we'll reevaluate. And but it looks very convicted to drop further from here. And if it doesn't, that's fine too. But certainly it's helped our bearish credit spreads. If any of you are in bearish credit spreads right now, you're probably reaping the benefits of this most recent correction in the market. Okay, now I want to just kind of go through some of the trades. This is your meeting. This is for you to share whatever it is you'd like to share. But I want to point out that we had this rut credit spread. We were down $935 at one point, and now we're down 80. Now remember, on this one, we were down $935 right there. And then what we did, instead of exiting or battening down the hatches, and we did nothing. We protected ourselves, however, with a bullish and a bearish XSP trade. This is the E-minis. It's a cash settled index, tracks the S&P 500, but the XSP is highly correlated with the rut. And you'll notice our bearish XSP trade has made us $210. Now we've lost 76 on the bullish one, but we made $210 there. So what's that, about 140 bucks or so of additional profit? And so net, we're up at the moment on our rut trade. So I just really want to punctuate that, highlight it, focus on the benefits of using butterflies as hedges. You don't have to batten down the hatches. Had we battened down the hatches, we wouldn't be up like we are now. So, and there isn't one way to do it. You could still do the batten down the hatches, but no matter how you decide to adjust the originating credit spread, I think the butterflies these kinds of butterflies, hedge butterflies, are really, really important and valuable. So if we look at the bearish one that we currently have, now we actually put this in the cocoon last week. We only got 9 days left. And what I'm going to do with this one is probably just close it out at this stage. Let's take that profit. Now the profit is exaggerated because of the slippage. You can see that in the colored lines, but that's a profit for us. We'll probably end up with, more like 150, 175, $200 worth of profit. We'll see, but I'm going to deem that one. I'll close it tomorrow, but that one is done its work. The bullish one, however, again, slippage is wide, so it's exacerbating. No, it's actually not bad here. This one's done. I mean, the thing has dropped so far. It's done its work. We lost only $76 to hedge the trade in case, hedge the credit spread in case the XSP and RUT rose. So I'm really happy with that outcome there. And even if the XSP had risen, we would have had plenty of opportunity to handle the risk up there. But it worked out well for us on that. So that's one thing I want to point out. And the other trades we have going on are doing well too. So our biggest loss right now is on Walmart. And what I posted in the WhatsApp feed was this adjustment. And so all I did here was contract and butterfly. And so this one is treading water. Walmart's kind of hanging. Walmart's now what encourages me to think that Walmart's going to hang sideways a bit, which is good for us. Theta's positive, tick, 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 stays where it is at expiration. We break even. So I think it's going to kind of hang out sideways, and based on what I'm seeing so far. And so that's good. We've got a trade where Theta's working for us. We just got to wait for time to do its deal. We got 51 days left. And then I threw on I put these in the thread, both of these trades. We also have this trade on, which is a bearish Walmart hedge. So in the event Walmart breaks out of the backyard of the originating credit spread, let me put it back up. Where is it? There it is. So in the event this starts happening, Walmart starts to collapse, we'll probably adjust. We will adjust this one. Maybe we'll just take off the bullish spread, take off this wing, get our max, our loss down here contained to a low amount, and then we'll let our broken wing butterfly here make us money back. So we're set up for a bearish correction. We're not set up for a bullish. And I'm not ready yet. I'm not worried about a bullish break. If we start seeing Walmart recover, maybe break above the break even here, or start to get close, then we'll throw a bullish one up here. And we're just going to checkmate this thing and not lose. So that's the outcome I'm expecting there. So I'm really happy with these strategies we've been doing. Our other bear call spreads are performing fine. UNG is a bull put. That we took that one off. That one's a profit. Our iron condors are all performing well. Here's one on United Health. Haven't looked at this one today. Yeah. Okay. Slippage is a little wide right now, but we're at a point now where it's time to just take this one off. So I will take this off tomorrow as well. So there's a profit. We're making money. We're making money. And I could go into more of them, but we do this on the live trade anyway. So what I want to do now is open the floor. This is 1 hour of the day, hour and a half of the day, whatever we go, for you all to talk. Andrew said, hey, I just got in. Did Mike cover what the HFF Zoom call, Hedge Fund Mastery Zoom call schedule is going to be now? I am not sure I have it correct. Yeah, we'll cover that, Andrew. Absolutely. ZM call not covered. Zoom call not covered. Oh yeah, I haven't covered it yet. Hey Henry, when I saw ZM, I thought you meant Zoom the stock. I was like, wait, we got a Zoom trade? All right. So the schedule next week for Hedge Fund Live is we do Hedge Fund Live Tuesdays at 3 p.m. Eastern. And then we do the group coaching as it is. So that doesn't change. The hedge fund schedule is the same. The sniper live trade remains. We're going to keep doing that. I told you I was going to take it down, but I'm going to keep it. So we're going to keep doing that. The hedge fund live will be longer to accommodate the sniper. No, the hedge fund live will be the same. Hedge fund group coaching will be longer though. So we're going to make that longer. And also hedge fund live longer. We'll do credit spreads and butterflies. So everything we did in snipers will be now handled in hedge fund live, which will be longer, and then hedge fund group coaching, which will be longer as well. So that is the schedule, Andrew. So really hasn't changed. The only thing that's changed is we're not doing this. This is our last time doing this call.
That'll be posted on the calendar, Mike, to reload
Yes.
that schedule. Okay.
Right, Gerardo? Oh, he lost. Oh, he's here.
No, I'm here. Can you hear me?
Yeah.
Yeah. What do you mean with the calendar, Hank?
When we first signed up, you can go in and take the calendar file down and then load it up to your personal. I was wondering if that file is going to be updated to reflect the new schedule.
Yeah, correct. We will update a new one with the new schedule for snipers and a new schedule for the next 6 weeks of hedge fund.
Thank you.
You're welcome.
Thank you, buddy. All right. What do you guys got? Who wants to share something? Breakdowns, breakthroughs, new ideas, questions about adjustments. That's what this is for. Let's go over to Paul in the Cayman Islands. How you doing, man?
Excellent. Everything's good. What I just wanted to revisit just for a moment is on the rut trade. Where do we get to trigger the taking the point, the two other spots? How far did we cross that break-even line? Were we approaching it? Was it just a feeling? What was the trigger point that said, hey, let's do something here?
Paul, I did yesterday. I pulled the trigger and bought the 650, 610 put. That gave me a credit of, it was like 250.
Yeah, let's come back to.
I'm just thinking of going back. Like I just wanted to see, I know what we did. I just want to know what was the reason why. Were we getting close? Were we already there? Was it prognosis? Was something showing us? Was there a clear indicator to go, hey, let's do this now?
Let's go back and look. I'm trying to pull up the trade here. All right. So we made the adjustment on 8/17. Hold on a minute. Let's take a look at the trade on 8/17. And then we
You talking rut or you talking the Walmart?
The rut.
Oh, sorry. I thought you were talking about Walmart.
Yeah, no, sorry.
Oh, that's okay. Yeah. So we didn't do anything to adjust the spread itself. We decided, let me take you back to a rut chart. I wasn't buying me personally, when this happened here, I wasn't really buying it. We did crack above the 200 right there, 3 days in a row. And that was the trigger. I think that was this day here. I think I tried to place the adjustment on the 16th and then it got filled on the 17th.
Okay.
So that's when we did the butterfly. Actually, let me see when we did the butterflies.
Did you do a butterfly?
Yeah, I did two of them. I did them on the XSP. That's what I was talking about.
Yeah.
Oh, okay. Yeah.
Yeah.
No, I thought you meant the rut trade itself.
No, that was done when we thought there was no way the rut would rise. Caused Andrew a whole lot of stress, and me too. But
that was the hedge funds trying to get you to buy out, sell out.
I know, is that they were fishing for us, trying to get us to buy more stock while they were getting ready to dump. Yeah. So we bought the bullish one on 8/9. Okay, let's go to 8-9. Let me go to a chart here. Let's do a regular stock chart. Oops. Do it here. Let's go to 8-9 and look at the rut on 8-9. Stocks, charts, stock charts. 8-9. Turn off IV. Update. And if I go to 8-9 again, didn't work. 8-9, go. So we actually did it earlier than before it even got to the 200-day average. And so it's always a good idea. You can do them anytime you want on these trades. I think it makes a lot of sense to do them as soon as you put these on. You know, do the longer term butterflies to hedge your credit spreads immediately when you place them. And so if that happens, so let's go to the same date here, which was 8-9. So on 8-9 here, you know, we're down in this trade, $430. It's starting to get hot, right? Now at expiration, we're fine, but because the stock rose so fast, we're down pretty big. And we just
And at that point, we didn't see it stopping. So we just,
no,
yeah.
yeah. I was like, heck, we might as well, you know, put on a broken wing, but we could have easily on 7-18 done the same thing. Let's just back test this. Yeah, I do back testing too. A lot. All right. Ain't no way. Ain't no way.
Perfect.
Ain't no way.
Piece of cake.
Yeah. Piece
Money
of
in the
cake.
bank.
Yeah, let me do a
Don't
lot
get
of them.
rejected at 1903.
So on that date, we could have also, let's just back test this, see how it would have worked. Just handling all these buttons here. Time searchers, earnings mastery. No, that's the other class. Broken wing butterfly. Where am I? Who are you? So we could look for on the, now this is where this trade is a 74-day trade. Now I could put 30-day couple of 30-day butterflies along the way, and that makes a lot of sense too. But if you just want to kind of like set it, forget it, not worry about it, you could also, this makes a lot of sense to me, but you could say, all right, let's go more bullish, and let's look at the settings just to remind you what that's going to do is place the short strike twice as far away regarding with respect to statistics, expected move, 1 standard deviation. So it moves the butterfly further out up. You could also here, as I've been talking about, you could also say, well, I want at least a 30-day butterfly. And then you hit search. Now index options may contain the rut, maybe not, but we know that the XSP, for example, this one is correlated with the rut. So we could easily have taken this on. You have $17 of risk underneath. So that $17 comes out of your very large credit. I'm happy with that. That's fine. I'll give you 17 bucks to hedge this risk up here. Absolutely, I will. So let's just take this trade as a back test. And if we take this forward to when we put the other butterfly on, which was 8-9, let's go up to 8-9 here. Is there enough time? There's a 30-day butterfly. Let's go up to, oh, I don't know what date. Let's just go up to August, see how this thing performed. Okay. What I need to do is zoom in so we can see better. So 463, say 470, 370 to 470. Now this hedge needs to be adjusted, right? So maybe we need to adjust this sooner. 370 to, what did I say? I can't remember.
470.
470, thank you. 470, 2 days, risk graph. Okay, that trade's performing nicely. I wouldn't do anything on this day, but we're starting to make our money back. We got 16 days left. And we know this is going to continue up. So I'm looking at that resistance level there. I'm going to wait to see that level broken. Let's let resistance do its work. And we're going to go forward a bit more on this time, on this spread. Let's go forward a week. I don't think it takes a week though. Let's go to the 5th, end of the week. And that's happening. Good. Good, good, good. This resistance level is held. Theta is working for us. Based on your at this point, I think, I mean, I was expecting a correction from here. I wouldn't have adjusted on this day, expecting that to hold. Let's go forward a little bit more. 8.5. I don't know. Next Wednesday. Okay, I would have adjusted by this point. Now here it gapped up. So the day before would have still stayed in. Well, heck, I might have gotten out on that day. I didn't save it, so I got to redo the limits here. Sorry about that. For 370 to 470. Let me save this in my demo folder here.
And if you could just show the strikes on this one as compared to the strikes on the first,
Sure.
the initial trade.
Mm-hmm. Definitely.
So what are-
You see that.
Oh, we're on something different. Okay.
Yeah,
We're on an indices. Okay.
Yeah, we're on a different instrument. Yeah, exactly.
Okay.
I'm going to save this in a demo folder so I don't lose my
He's showing
settings.
he's showing the hedges, Paul.
Yeah.
All right, you know, and I'd be like, hey, nothing to do, man. I'm thinking this thing's going to hold. The stock will drop. That's what I was thinking at the time. I was thinking that the whole way up, actually. So I know that's what I was thinking at the time. And nothing to do. And then one more day happens.
Would you consider the new move?
The new moon?
Yeah, the new move to break the cocoon, put it in the cocoon.
Yeah, that would, you know, in hindsight,
Just looking at that looked
we could try it. Let's try it.
right. It was 17 in, and you had 42 as a profit. So
I had to save the settings again. Yeah, that would have been a viable adjustment. I guess at the end of the day, you want to, let's go forward one day. At the end of the
that's
day,
what it gapped, right?
yeah, that's when it gapped up. But we could have considered that cocoon adjustment here and grab some profit. And then what you do is put another one on, a shorter term one. I go back to the trade we were in, which was, let's go to the same date on this trade. So this date was August 9th. That turns out to be when we did the adjustment. When we placed the second butterfly we placed was on August the 9th. And that could have been the one we put on again. And so at this stage, we're down $430 on the originating credit spread. And now, of course, I would size this bigger than we have. Let's size it. I would have done it probably, let's see, probably 1,300, $17 underneath. I would have considered 10 on this one. 10 butterflies. Let's get some numbers that match up. To hedge this, you got to do more than one, of course. So at this stage, we've generated $420 on this broken wing that we put on same day we put on the credit spread. So we made 420 on that. We lost 430 on that. We're breaking even. Anybody interested in that?
Yeah.
You
That's
know
what
what I'm saying?
Definitely.
Yeah.
Now, I've asked a lot of people to back test this, and I don't know if many people are doing it, but we just did a back test. We took a theory, which is it would make perfect sense to hedge a long-term credit spread with a 30-day butterfly. In the event the unthinkable happens, then we make some of our money back. In this case, we made almost all of our money back. So now we're breaking even on this trade. And then guess what? We're not done yet. we put on another one, and you just, I was going to say bitch slap, but I didn't. You know, you just bitch slap the stock. Go ahead, make a move. I got you. Boom, boom. It's not very zen, I know.
How many is a flock?
2. Now, this should inspire you. Well, we're going to do the cocoon adjustment here, Hank, but I'm hoping this inspires you a little bit. You could quite literally take your losing bear call spreads. I know some of you have them, and go back and retrofit a longer term broken wing butterfly and see how you would have done. Imagine we started with this, right? We're up on our, we're breaking even on our ret trade now, but we place the butterflies later. But you could have placed this one on, and then we could have taken this $420 of profit, taken it off, and then put on the other one that we have on now, a bearish one maybe, and a bullish one. And now we'd be making money on this losing credit spread. Well, it's now starting to make money, but still losing, but only $80 at the moment. So,
Mike, I had a losing bull put credit spread, which did a Walmart trick, if you like. This is going back to soon after we started these classes, and I was looking. I ended up contracting the strikes and turning it into a standard butterfly, locking down the hatches. But I was looking for broken wing butterfly hedges. Like I can't remember the instrument offhand, but I couldn't find one on the scans I was doing on fewer standard and more. But what I wasn't doing was looking for analogous stocks, similarly correlated. And this example on the rut, where you went with XSP, was very informative, and that's what I'll be doing in the future. If I can't find a broken wing hedge on the same instrument, I'll look for another one that's similarly correlated. That for me has been a light bulb moment.
good, man. Thank you for sharing that. Here's another idea. I like butterflies better than credit spreads. I don't lose on them, and we haven't yet either in this course. So why mess with them? Now, mess with them. I'm not saying not to, but you could say to yourself, well, I'm just going to confine my long-term credit spreads to indices, to market indices, maybe sectors. And then with those, the reason I bring that up is, one, it's a smaller universe of stocks to play with, which has its advantages. And there's more chance of finding a correlated index. The RUT, the diamonds, the Dow, the S&P 500, the NASDAQ, the S&P 100. There's an index for that too. They're all pretty correlated. The only one that's not as much is the RUT, but we've just proven that recently the XSP and the RUT have been very, very correlated. So if you're in that world, John, then you're going to find it's going to be very easy to find a surrogate.
Yeah. The other thing, Mike, I've noticed is I'm attracted to Matt's philosophy of legging into iron condors. I've done 3 since he brought that up, and if I see a stock, for example, today I got filled on a bull put spread on Zoom. The reason being that since it dropped, 80 is held as good support, and I had a good till cancel spread in on higher than the scan was giving me in terms of a credit. I put it on early this week, and with the overnight drop, I got filled on it. Now, if it breaks substantially below 80, I'm not going to play around with it. I'll get out, because I'm not expecting it to break below 80. But if it turns around, which is what happened with the MU trade I put on, if it starts to bounce off 80 and climb higher, then I'll look to leg into a call credit spread to create the iron condor.
Mm-hmm. Yeah, I like it. I like it. I'm looking at the Zoom chart now, and this is one of those cases that that I like. You know, the stock, we talked about this last week, I think, but Zoom dropped, and then it's been channeling pretty much sideways around 80 or so, 80 support for over a week now. So the directional prognosis on this should be sideways. So yeah, I would even think about doing it sooner. I don't think it's going anywhere for a while. And if you're selling at 100, what's your short strike on the bottom?
No. I've sold 60 and 50. I just got filled last night. Well, today, your time.
So your short strike is 60?
Yeah.
Yeah, so that's what I'm saying. So you have a short strike here at 60. I would sell the 100 calls all day long at the moment.
I want to wait for a bit to see. It's a November expiry. I want to wait. This is exactly what I did on EU. I want to wait for a bit to see if it bounces.
Mm-hmm.
And if it bounces to 85 or perhaps even towards 90, then I'm going to sell the call.
Got it. So in the event there's a bounce, what John's saying is if this bounces up, he'll get more credit for the bear call up here, wherever he puts it. 100 is where I put it.
And I definitely want to be above the second standard deviation line. That's one of my guiding principles.
I like that principle. I would say what trumps it is support and resistance. Yeah, for sure. 100 is, even if the standard deviation line is up here at 50, 100 is stronger than that line, that standard deviation line. That's a strong resistance level. I don't care if it's a fib level or any other level. The round number support resistance trumps everything in a chart. Everything, every single thing. It's even stronger than Fibonacci. In my view, in my experience. Now, sometimes Fibonacci and round numbers line up. When that's the case, then I like Fibonacci. I make it simple. We got great strategies with high probability. And I'm not discounting what you're saying. I'm just amplifying the point a bit about resistance levels and support levels, particularly round numbers, particularly increments of 100 or 1,000. Those are super strong. So yeah. I like this one for a butterfly right now, by the way.
I have a standard butterfly. I have a standard butterfly on it, Mike. It expires on Friday.
Can we see it?
You'll have to let me find it. So keep talking.
Okay. Let's see if I can find something to talk about.
Hey, Mike, you know what's driving me nuts is GM.
Yeah.
I tried to find an inverse on that one, but I can't find one. But you do compare it to the DJX Dow, and of course, that's been going down, and GM's just started. I did on the chart when I paired them.
Mm-hmm. Let's pair. You want to pair with the SPYs?
Yeah.
Okay.
No, I did it with DJX because the correlated analyzer gave me that.
Okay, let's do DJX. Let's pair them. What pairing does is it locks the stocks together at a single point. So in time, so this is back to 1220, which is what 9 months or so ago, I guess. And you can see when they at their starting point there, you can see how GM's has performed relative to the DJX, which is the black line. So this is the Dow, and then GM has really dropped far away. And the correlation at this, I guess it's pretty good recently. And then if you want to see how, just overlay the charts without pairing them, you can kind of get a better idea of how they're doing lately. And they're pretty correlated now. They're definitely separated. This would be a good pair trade, actually, huh?
Yeah.
So what are you trying to do with it?
No, I was trying to determine if it's going to fall or not. It's very stubborn. It's been hanging out at our level there near 40.
Mm-hmm.
Today it moved back down. Seems like it's catching some of the, I think that's a 10-day I had on it.
Okay.
Keeps riding that and bouncing off of it. It won't break below it.
All right. So you're looking for a particular move, and I'm on the wrong date. What am I doing here?
What I was trying to do is come up with a like we did with the rut. Find
Yeah.
something I can hedge against it.
Mm-hmm.
And I haven't been able to find it. So then I've been contemplating, okay, what do I want to do with it?
Are you in it now? Or you're waiting for a signal to enter?
No, I'm still in the GM trade that was put on.
Oh, the bear call. Okay, now I'm with you.
Yeah. Yep.
Okay, let's look at the GM one. We could start thinking about hedging this bad boy.
And that's what I was doing, is trying to find it. I've been looking for a hedge since it broke up a little and then it dropped down below, but I was thinking, I want to hedge that with some, maybe put on another butterfly, but it's being stubborn. It's not really, breaking that level there.
This support
If you
level.
put the 10-day on the moving average, and I got about 120 days, it keeps bouncing off of it. Comes
Yeah,
through, but falls up on the close.
Yeah, it's right at support here. It's come down a bit the last few days.
Yeah,
Let's check the volume on it, see if that's
not enough.
hasn't really spiked up though. A little bit about slightly above average, but pretty much average. Yeah, I mean, right now we should be thinking about how to throw on a broken wing butterfly of some sort. And you said there's none, right?
I didn't find one. I didn't try one this afternoon, but I didn't find one yesterday. And
I wonder
like I
how
said,
the excess.
so the XP, what we're going over about trying to, hedge the rut. I thought, okay, let me look. So as you were talking, I looked, and like I said, DJX was the closest.
Okay. Let's just check out the XSP may correlate. Let's just see, because I know we can find a butterfly in the XSP. Yeah, GM. No, it's not. It's definitely not. The XSP is dropping hard, and GM isn't.
Yeah.
Yeah. Yeah.
Mike, a question
Yeah.
on the, how about the IWM versus the rut? The IBM has got much smaller strikes instead of having to go with $1,000 per. Looks like IWM is the same as the rut, and looks to be more liquid. Am I misunderstanding it?
No, you're right. You're absolutely right. When we did this trade before, the rut came up in the scanner, the IWM didn't. So that's why we took it. And then Matt took a sister trade to it as well.
Andrew, when I do it for the purposes of commission,
Oh, you get.
you have to buy a lot more of the IWM to equal the return or the dollar value, the credit.
Yeah, that's
Okay.
true. On the rut trade we did, what did we spend? We spent 1,000. Is that the rut trade? No, that's General Motors. Where is it? Is this it? No, let me pull it back up. We spent about 1,000 on this one. Got a lot of tabs up there. We spent.
I was just going to say a lot of sessions and now a lot of tabs. We're really going to confuse you.
I stay confused. Yeah. The thing about the rut and the DJX and the NDX, which are the cash settled indices for those markets, the slippage on the rut is tight. It's really tight. Well, it's about 10%. But on these, what I've found from trading them a lot is the slippage may appear to be 10% or even higher sometimes, but mid-price fills on these are easy. Wouldn't you say, Hank? I don't know how.
No, it does. Yeah, agree. Mid-price fills.
Like that.
Yep.
And then when I started snipers, we were doing this end of day credit spread strategy, very risky. And we went from the SPYs to the SPX because it was easier to get filled. Yeah. I mean, SPX, the SPYs were easy too, but the rut had some advantages with the way it expires, and the SPY actually traded after the market closes for 15 minutes. And it settles an hour and a half later, and we know about that risk. You can get assigned up to an hour and a half, up to 5:30 on those. But so, yeah. Anyway, you're right about that, Andrew. The IWM is cheaper. You have to do more contracts, pay more commissions. I don't really worry about commissions too much, but but it is an advantage for sure. So back to the GM trade, and John, when you're ready, just chime in. We'll let you.
Yeah, I
You
have
ready?
it when you want. Yep, yep.
Yeah, let's talk about it.
Oh, hang on, I got to share screen, right? Obviously.
Broken wing for the GM trade. Would you?
Can you see that?
Yeah, we got it.
Okay. It closed today your time at just under the lower break even. At the open, it was looking good. It had moved up, I think, to 82 and change. So I thought, great. I'll move down to the risk graph. I thought, great, it's going to sit around here. I'm going to watch it tomorrow your time. Hopefully it'll get a bit of a bounce, but if not, I'm going to cocoon it. I've got a saved cocoon adjustment that I'll place in the event that tomorrow it's not bouncing up from the close of today. But it's if it can come up around 83 odd, it's going to be quite a profitable trade. What I need is for the White House to mandate that all federal employees use Zoom for conferencing, as they were kind enough to do with my Novavax trade when they dumped the obligatory COVID shots. I had the same trade, you might recall, on Novavax, and it it bumped right into the mouth when the White House made that announcement. I was
Hey, John,
appreciative.
Yeah. Yeah. I wish I had some inside influence. Here's another idea. Do you think the stock's going to rise from here very much by Friday?
Well, at the open last night, I did, because it got it. See here, it was at 82.97.
Yeah.
And the sold strike's 85. So I had hoped that it would hang out around there, 83 on. If it doesn't have a bit of a bounce tomorrow your time, what day are we on over your? Oh, so you've just closed Wednesday trading. If Thursday trading doesn't move the stock north, then I'm going. My plan is to cocoon it.
Got it. I think it's going to bounce. I think it'll bounce because 80 is strong support. But here's why I asked you the question. I don't think it's going to get up to your break even by Friday. So you have a bullish and a bearish trade on. You've got the 92.85 bear put spread, and you've got the 78.85 bull put spread. You could literally pull off the bullish wing, close the bottom, and then just see if you have. You'll probably create. Just try. If you could just try it, duplicate this and pull off the bullish wing and see.
Okay.
Unless you've already tried it.
No, I haven't tried it.
So you duplicate the tab.
I just need to move this down a bit.
Okay.
Okay.
So let's just close off the bottom, one of the 85s and then the 78. And you might get a little credit down there.
Nice work on the colors.
Thank you.
Yeah.
I'm learning that as well.
It doesn't generate a credit.
No.
There's not enough time left, but you can do this
No,
sometimes.
there's not
if
enough time left.
If there's enough time left, it can. Let's look at the risk graph. What's your risk down below $9? Or
No,
on the adjusted trade, what does it look like on the bottom? Yeah, there is profit there. So there is a little bit of profit there.
$21.
Yeah, it's not zero. It's no loss. It breaks down. So that's an adjustment. Could possibly.
Do you want me to cocoon it?
Yeah, please.
I feel if you cocoon something that's not in profit, there will be no profit.
Correct.
Yeah, that could well be right where we are now.
Yeah, you try it out. It works really well when you have a nice little profit, but it's gonna
It's
lock
sort
in.
of, it's putting the brakes on everything.
Yeah.
What about widening the upper wing and risking more on the upside move? But
I'd looked at that earlier on. I can't recall what result it gave me.
Or you could drop your short strike as well,
Yeah,
or two, or we only have, we could drop one of them, split it up, make it a condor. There's a lot of things you can do with it.
I've done this right. Yeah, it's dropping the max risk to $16, but you've got obviously a very narrow opportunity of profit.
Mhm.
You know, 84 to 80, 85, 80.
Mhm. Yeah, and if you were in profit, your max risk would be a profit
Yeah,
at the moment.
Yeah.
If you had enough profit, yeah.
well, it might even be worth doing that. If it bounces tonight, it might even be worth cocooning it and ensuring a small profit.
Yeah, I think it's gonna bounce. Unless it doesn't. No, Zoom is 80 is super strong. This thing's going sideways. I don't think it's dropping from here. Although it might go down if the market drops again tomorrow, Zoom might go with it.
Yeah.
So that's a possibility as well.
Just looking at
Okay.
the news on Zoom, you got downgrades from analysts out, even though it reported positive earnings.
Yeah, let's look. It's a
You must
downgrade.
be buying.
Yeah, exactly. Exactly. Downs from hold to buy. That happened on the 26th, right after earnings. So the news is out. That news is out, and the stock. I want to zoom. Let's zoom in to Zoom on a stock chart, and let's take a look here at Zoom. I'm going to do a regular chart here. All right, I got to turn this other stuff off here. Candlestick. Okay. Moving averages. Yes, please. Although we don't really need them. I'm back tested. Sorry.
Still the same date.
Am I?
There
There
you
we
go.
go. 80, 80, 80, 80, 80, 80. I think you're okay. I think it's going to probably drift up a bit. But if it cracks down below, if it drops below 80, even intraday, you might consider, either closing a position or buying back the bullish
Yeah.
put spread underneath, the short
Yeah.
put spread,
Yeah.
and just taking a little bit of money and not losing anything.
Yep.
Good trade. I like a butterfly on this right now too. Tomorrow, if Zoom is 80 holds, and go look for a. Did you find
70, 80, 90.
Yeah. We'll just do a quick condor on it. At the money iron condor and Zoom. We can even do a wide one. Let's do a little wider. Take less profit. 10's too wide though. So well, that might be all right actually. 10 point wide iron condor. And let's see here. This is a 9-day trade. Let's see. Can we see if what this thing looks like for 9 days? Yeah, I like.
Yeah.
9-day trade. Are you serious? Now we could lift it up a little bit more. let's run it again with, we got 10, that's fine. So if we don't like 85 as the upper strike, we can widen it. You know, we have the ability, of course, to widen the spread. And I just usually do that manually. Pick your lines. What lines do you like? You know, what support levels do you like? And I'd say 85 is where we're at now. The stock's at 80, 75, 85. I mean, I will try it. I don't know if we're going to get enough credit. There's 56% potential profit right now, but we'll edit it and just lift it up. I would like 90, please, and 70. And let's give ourselves a little room to adjust. What are the strikes for September 9? Let's see. Up there. Yeah, they're 50-cent strike. Well, there's certainly 1 point strikes up there, or down there and up there. Let's do at least two strikes, maybe a few more. 92. So that's a really wide iron condor. 10 points on either side. There's 13% available if Zoom stays in the backyard. Very large backyard. Probability of profit is 60%. Based on statistical movement, it's a good looking trade. 9 days, you make 13%. High probability of profit. That's a nice looking trade. The other thing you could do with it, let me post that trade if anybody wants to grab 13% with high probability. And part of the probability is given by the stocks going nowhere. It's dead. It's break out the paddles right now. I'm going to post this in our WhatsApp thread. Get logged in first. This is Hedge Fund Live. So that's like staying on the sidelines, grabbing a little bit of profit. Not much you're going to have to do with it. News is out. It's already gotten hammered. Just got to find my trade. There it is, I think. Oh, that's the other one. Here, no, that is it. That's it. Okay. Let me just give you the risk graph as well. There we go. What's that? Now, what I kind of like better though is let's make a bit more money. So I go into, instead of the Condor Finder, which is safer, less profit, more probability, less you'll probably have to do, single strategy, butterfly. And let's do at the money put on Zoom, search. And then I go all the way to the bottom and I find one. There, that's the one I want. The strike is at 80, perfect. This is a 70-90 butterfly.
Yep.
Maybe we like this one better. That's 100% potential profit in the trade. Now you do have to worry about this upper break even. You know, whereas the other one, the break even was way up here. So that's something to contend with. More that you'll probably may have to do on this one in case the stock starts running up. I don't really like that break even right there, to be honest with you. So in this case, I would lean towards the Condor, I think, in this case. And of course, the Condor is a butterfly. Now you could turn it into a Matador if you have more downside expectation. You could narrow the bottom spread and widen the upper, or do more on the upper two ratio. So more call spreads up top, making it more of a bearish iron condor, less risk on the bottom. So that's available too. You know, I could do two of these and one of those, or whatever ratio you like, depending upon your prognosis. So yeah, I like
I'd be
these
inclined to sell more puts, to be honest.
Yeah. Okay.
And unless tomorrow it drops. If it drops below 80, then that changes the ball game.
Yeah. Yeah, exactly. That a close below 80 would be significant because the stock hasn't done that.
No, it's held pretty well.
There you go. So if there's a bounce up, then you deal with this up here, but you've got plenty of time. Also, when you put these on, you could say, you know, look for some broken wings to hedge this wing here and hedge that wing. The chances of finding them on Zoom you know, probably not so great, but we can searchers. Let's just go look. And just run a broken wing butterfly on this bad boy on Zoom. I'm gonna try. Let's just look. Doesn't hurt. It's fast. Nope. Nope. And it's going to be tough to find a correlated stock because Zoom is flatlined. It gapped down and flatlined. Oh, here's one. Okay, this is a bearish one. And you got to spend $13 of your credit, but you get 237 potentially. You're not going to make that, but you're going to make a decent amount of return if the stock drops. So you put one of these underneath in case it drops, and then go look for the opposite.
That's not so bad.
I think it's pretty good.
It's close-ish.
Yeah. It's good. Definitely. And then hedge the upper side too. So let's see if we can get a bullish one. And there is one. What? Yeah. $11. Here's the bullish counterpart. Now the sum of these wings here will detract from the credit of your condor. So that needs to be taken into account. So in this case, 11 cents there, and then 13, so 24. Let's call it $25. 25 cents of credit comes off, and then you go back to the condor if I can find it. That's not it. That's not it. Where is it? Here, hopefully. There we go. Let's do 1 and 1.
Oh, that's the. Oh, there we go.
Yeah, because this is a 9-day trade, your credit is going to be eaten up by the butterflies. So if you want to do that trade, you got to put more time. Let me get rid of some of my tabs so I can. So this is a 16-day butterfly. So let's just line it up. I need more, because I'm only selling 9 days. I'm not getting as much credit. So let's just go ahead and put this on for another week to match up the expirations and see if we get enough credit here. I think this adjustment makes more sense with the butterfly than the condor. Condor's already got built-in probability because your short strikes are so far away. Huh? Oh, there's no 68 put down there. Let's see. Let's see, September the 16th. Go to the 16th. I'm selling the 70. What's underneath 70? September 16th. 65. So we got to do a 5-point wide condor then. And we do a balanced condor. This would be 95 up here. So this would be the credit for a 2-week condor. See, this is making a bit more sense now. So we're getting $106 of credit, and then we're hedging the upper wing with, or the lower wing with this one. It's going to cost us 13 cents of that credit. And then this one is hedging the upper part of the condor, and that's costing us 11. So 24, 25 cents of the condor is eaten up. Where the hell is it? There it is. So then your net credit here becomes, 70 cents. That's still good. 70 cents. We're still going to be in the 20% range or so on this trade, and you're hedged on both sides. On the butterflies, same thing. Is that it? No. I got too many tabs, everybody. I'm sorry. Did I kill it already? I like that adjustment, I think, better on the regular butterfly, because we can swoop in, get more aggressive. We're hedging ourselves after all. Let's just go ahead and do the regular butterfly. Where am I here? Oops, searchers, single strategy, butterfly. Zoom, at the money put butterflies. take the one on the bottom. Is the lowest percent return on investment. That's that number, but it's going to be wider in exchange. So this trade, yeah,
You've got September 9th date again
I do.
versus September 16 on the hedging butterflies.
On this one, September 9. Yeah, I'll just change. I can change the strikes. Well, actually, when we do this trade, yeah, we don't have a broken wing for 9 days, although we could look for them. So yeah, I would do the same thing on this one. I just change the expiration dates to the same, and then your expiration dates are lined up. You'll get more profit on this one, potential. And so then you have this trade on, and then you have, this is what I would do instead of the iron condor, I think. So now you've got a break even here that's going to be protected by a bullish broken wing butterfly. So this one, this trade will hedge this wing. And then you do the bearish one underneath, and then you're covered everywhere. Wherever the stock's at, you're making money somewhere.
There's no overlapping strike on the bearish side though.
It doesn't matter.
Standard fly?
Oh, you mean on the puts? Yeah. So we got to check to make sure the puts, because this is a put butterfly. We don't have to worry about the calls, of course, but that's a good point. And you got to do that, everybody. Make sure that the put butterfly doesn't have strikes that overlap the strikes of the balanced butterfly. So here you've got a butterfly 70, 80, 90 are your strikes. And so we don't want to mess up any of these strikes by buying and selling more of them. So check your strikes and you can see that none of these strikes overlap. And that makes sense because this is an out of the money butterfly. They shouldn't, but they could. And you don't want to be, bastardizing your originating butterfly by selling one of its legs. So yeah, I like this right here. I think this is good. Should I post it? God, the enthusiasm. No, I guess I won't. Work with me. I'm not supposed to be doing all the talking here.
I was muted.
Yes,
Okay.
post it, post it.
I was muted.
All right.
Post it.
The tricky part is getting the fills on all those flies at what you're indicating as the debits, I guess.
Yeah, that's true.
You might not, I'm assuming you might not get them all filled.
You might have to pay a bit more. Yeah, you might get less credit, pay a bit more, but that's okay. That's part of the game. And the slippage, fortunately, is pretty tight on these options. I mean, look, 40 cents on $1 slippage would be a 10%. And the slippage is 40. So the slippage is what, 4% or so, which is tight. So fill should be no problem on this one. Here's the risk graph. If anybody decides to take this on, please let us know. Maybe I'll work on this in the morning, get it filled. So there's the balanced butterfly. And then we're going to do the bullish. Let me make this pretty though. 70 to 100. For me, there's a lot of value in making it pretty because that ain't so, I mean, I know what it is going to do, but I think more representative is this. When I do the zooming in and taking off the last 2 days, because you get a really nice feel for the amount of profit that's actually up here. You don't really see it if you take the originating risk graph. So this is the bullish hedge on the butterfly. Oops, hold on, right here. I might do this one myself. This is sexy. It's damn sexy. All right, let's go right here. Now grab the risk graph. right here. There she be. And then I'll give you the bearish one now. Let's go find it. There it is. Let's make it pretty. 55 to 90. 55 to 90. Take off the last 2 days. Risk graph. These are nice. I like them. Okay. There's how to checkmate Zoom. Flocks of butterflies. I think we're calling them
Kaleidoscope.
kaleidoscope, yes. Lucy in the sky with diamonds. That song pops in my head when I hear kaleidoscope for some reason. So there you go. You checkmate that sucker, you know? You want to see it even prettier? You take the balanced butterfly and chop off the last 2 days as well. It looks and you could overlay these charts, in fact, and it's a beautiful thing. Let's say 55 to 98 or 100. Let's make it 100. Why not? 55 to 100. Take off the last 2 days. So then you take that picture. You got that picture. You got that picture. And you got that picture. And so what that means is you got a little bubble up here of profit. You got a little bubble of here down with profit. You know, go sideways, fine. I'm good with that. We make money there. We could always squeeze some of the risk out of, you know, if the stock's rising a bit, if we're losing here, we can take some of the risk out of there. And then we can also take some of the risk out of here if it drops. You know, we can take that $24 of debit essentially, which is our insurance. And the 24 comes out of, I mean, look at that. Max profit right here at 80, which is a good chance it could be very close to 80 in 16 days. Then you're looking at a nice $300+ profit. And you've only paid 25 bucks for the insurance. Kaleidoscope of butterflies.
Could you overlay the main butterfly in either the bull or bearish?
Yeah, I can.
Thank you.
You're welcome. I mean, it is the right thing to do, right? Since I just said it. I just got to save the trades and get it set up, but I'm happy to do it. It's part of the game we play here. I'll do all of them. So I'm gonna save these in my folder. I'm gonna put this on tomorrow, and let's use this as a case study because this is like the next level with broken wing butterflies. You know.
Mike, that speaks to a feature request for John, putting
Yeah.
3 trades together so you can put on your main and have your hedges and see the whole deal.
He always snaps at me every time I ask for something. We got too much to do. But John,
I'll send a request to Jay.
No, I got more. I mean, I got power with John, but you just got to go through his gauntlet before he'll do it. But
That's
I like,
right.
It's got to be his idea.
yeah.
That's
John.
usually the best way.
Hey, John, I got an idea for you to make money. Yeah, what is it? And then he might do it. I gotta find it now. Let's see. Haven't I saved these here? Thought I saved them.
Yeah, you did in demo.
I gotta hit risk graph. I forgot to do that. So the browser doesn't know of the new trades because I just saved them. So now I've got to find them. So here they are. Let's put the bull on top of the balanced. Okay, so what I've done, this is the balanced butterfly. No, I'm sorry, that's the bear. So then I need to grab the balanced, which is this one. So that's in the folder. That's these purple buttons will operate on trades in the folder. The green buttons operate on the trade that's on the screen. So what I want to do is take the trade that's on the screen, this one, and overlay the balance butterfly. So then these two will now be overlaid if I click overlay. And now that is with, now I need to do more of the smaller ones too. We've got to do more. So I haven't sized them. Maybe I need to size them. Let me size them. So this is a bigger trade. I mean, it's $336 of profit, $383 of risk. So I've got to increase my butterflies to account for risk here and here. They've got to offset. So I got to do more than that. So I can go right into here and just click risk graph right out of the overlay, and I'm going to do more contracts. Let's just say I'm going to do 5. Maybe that's a few too many, but just for sake of example, I'm going to update that and then re-overlay. And that'll be a more representative picture overlay. Yeah, baby. Now you can right on here, you can say, all right, well, chop off the last 2 days on both of them. Boom, boom, overlay. Anybody got a cigarette?
So now the total risk that your hedge is costing you is 5 times 25. If you assuming that you do the sizing on both of the hedge flies. So that comes out to be 125 cost of hedging.
Well, the max risk, the total margin requirement for all 3 trades, 2 of them are shown here. So the balanced butterflies, let me see, what am I doing here? The balanced butterfly has $383 risk. The bearish, this is the bearish one, right? Yeah, the bearish one has $315 risk, and the bullish one will have about the same. So that's something to look at, you know. Your max, if let's say it's 350 times 3, now you're over $1,000 of what I was going to say theoretical. It is actually risk, but you're not going to lose on all of them. You can only lose on one of them, but we're not going to lose on any of them because we're going to adjust. So the margin requirement for this would be the max risk in each of the trades, which will be about $1,000 based on how I currently have it sized. But I tell you what, you know, the 2 to 3% portfolio value, I got to be careful here. I don't want anybody to just go out and violate that. But if there's ever a time to increase your position size, it's when you can get pictures like this. And we don't even have the bull one up here. So we can get rid of that risk when we want. We can move this risk when we want. We can move that risk when we want. We can move that risk when we want. We can always mitigate at the very least, if not turn it into a profit. So this is more complicated. You have to manage 3 different trades, 3 different risk graphs. But the way I do it is I just look at them one at a time. All right, what am I doing with this balanced butterfly? Well, I'm going to tighten up the bottom wing. I'm going to cocoon it. I'm going to drop the short strike, whatever the various adjustments are. And then I look, all right, what's the bull doing? Okay, the bull's fine. The bear one, the stock's getting close to the lower break even. I'm going to contract the lower spread and shift the risk, all the risk up top. And so then you're managing 3 trades, but that might seem intimidating, but think about the power of that. The chances of making money on this trade are high.
You know, I'm wondering.
just gonna hold on a second. I'm just gonna drop the mic.
I see. If you one way to look at this, you could do all three trades as one trade, starting out with the first fly, the symmetrical one, and then you edit it and you add in the top fly and you add in the bottom fly. And that'll give you your total everything.
Yeah, but managing it would be tough.
Well, it wouldn't allow you to see them but if you just wanted to see what your total risk was.
Yeah, you
And-
could do that.
And
Yeah.
also I noticed that the break even points on the two that you just overlaid, you can see that the break even on the downside went down.
Yeah.
So would be a way of checking out your break evens
Yeah. I like that.
just
Yeah.
overall. But then obviously you'd go bananas trying to manage it as one trade.
Yeah.
So you ought to break it. Then to manage it, you look at the three separate ones.
Yeah. I think there's value in that. So you'd have 4 risk graphs. You'd have the composite risk graph of all the legs. Then you'd have the
Right.
balanced, the bullish broken wing and the bearish broken wing. You have 4 risk graphs and you can see them all, and they can do overlays as well. Yeah, that's certainly valid. That makes sense.
But you can't do overlays with 3.
No,
So you couldn't take the 3 separate trades and overlay all 3 to see both sides, the up and the down.
no, unfortunately not.
Okay.
I'm already seeing John's response when I ask him that. He ripped my face off. He's a nice guy. I'm just kidding. He's a little bristly, but he's a cool dude. He's really gentle after you get past that. Don't tell anybody I said that. I shouldn't have said that.
So what I'm
All right.
hearing is if the total risk on this, the margin that you would need to set aside is more than your 2% of your capital.
And it depends on your capital, of course, but
I mean, right, but this might be one of the occasions when you sort of go outside of that in terms of
Yes.
risk management, starting something.
yes. Because you can't lose on more than, I mean, you could lose on 2 trades at once, but you can't lose on 3. And we're not going to lose anyway because we adjust. So with
It's
all
too
those
bad-
things said,
Yeah, it's too bad the brokers can't take that into account like they do with iron condors, you know?
I wish. Yeah, imagine if they could do the iron condor margin on 2 opposing broken wing butterflies, bull and bear. Wouldn't that be cool? Hey, broker, I can't lose on both of them. Why are you charging me 2 margins? Yeah,
Good question.
it's a good question. It's a good question. Good to see you, Sue.
Thanks. This has
Thank
been
you.
really intriguing.
Good. I hope so.
And you
Let's
know
go to
what?
Glenn. Go ahead,
What
Sue.
was most helpful for you to hear you say is when we were looking at criteria for prognosis, to number 1, look at support and resistance, especially if they're at even numbers.
Yeah, round numbers. Yeah, even
Round numbers, I meant,
Yeah.
yeah. Because I've been
Yeah.
trying to put down a list of, okay, what are my criteria for judging prognosis?
Yeah. Yeah. And I'm not saying, I want to be clear. I'm not saying that other analysis techniques don't work. I mean, I've taught them all of them, parabolic SARS, stochastics, MACD histograms, Elliott wave, and they have their merit and they're good. They predict greater than 50% typically. Those I would say Elliott wave does, but I can't say that for the other indicators, but no matter what those indicators say, if there's a resistance level or a support level at 80, that level trumps them all. That is the most important level on a chart. And the reason for it is that institutions are the ones that are setting those levels. That's why they're programming their computers to buy and sell stocks, and they have points and they draw lines in the sand, sell the stock until it hits 80. And then when it hits 80, their programs come in and they start buying stock. They don't think in Fibonacci ratios. We're humans, 10, 20, 5, 100, 200. So that's the reason behind the, my view is on that is that institutions, us humans are setting those levels. And on top of that, you can look at any chart and you'll see it. I mean, IBM, I haven't looked at IBM in a while, but I guarantee you IBM bounces, IBM will find, you'll find support resistance at round numbers. There's 140. Bounce, bounce.
Share your screen, Mike.
Oh, I got to figure out how to, I do this all the time. I apologize. It's just that I'm thinking so much at once. Here's a pivot point. Where does it happen? Right around 130, 130, 130, 126, 120. Let's make this round numbers, more round. There we go. That's what I want. 2.5 increments. 142.50, 143. Here, I want 10s. Let's get to 10. There we go. 5-point increments. Okay, there's 140, 130, support. Now they get broken, of course. You're just looking for turning points, and you'll find that they tend to happen at round numbers. 125 right here. Bounce off 125. Bounce off 125. Bounce off 125. Institutions are going, all right, dump IBM until it hits 25 and stop. Boom. It hits 125 on that day right there. No, it's not a good chart. You can't see it. It drops to 125. Sell until the 125. 125 hits, you get a hammer pattern on that day, and the stock takes off to 140. So that's the reason I'm so convicted about round numbers.
Have you ever used the same thinking in comparing standard deviations like with Fibonacci? I mean, I understand one is a statistical, and I don't know how you classify Fibonacci. Sometimes it's a mystery to me, how it's applied to things. And I mean, it seems to be applied everywhere.
Yeah. Fibonacci is based on the Fibonacci sequence. You take 0 and 1 and then add the prior two numbers to get the next. You go from 1
Right.
to 1 again, and then you get 2, and then you get 5, and then you get 8, and then you get 11, and as those numbers increase, you'll find that those numbers appear in nature. Of plants, flowers tend to have 5 petals or 8 petals. So things like that start showing up in nature. And then as you go higher in sequence, if you divide two successive numbers by each other, you get one of two numbers, 1.618 or 0.618. And if you keep dividing all the way to infinity, that's always the result. So that's where the magic comes from. And then if you look at the ratio 0.618, you can measure the distance from your belly button to the top of your head, from your head to the bottom of the floor, 1.618 or 0.618. You can take your arm and the shoulder to the fingertip, from the elbow to the fingertip, divide the two distances, 0.618, 1.618. It's everywhere. It's even in stock charts. So all they're doing to calculate those numbers is doing the math. The high of the market, the low of the market, and they determine the distance, and then they apply the ratios. 0.618.
What intrigues me is that, when you look at the ratio in your body or flowers and whatnot, that's a very physical ratio. But the stock market seems to me is a much more how it moves is much more psychological.
Mm-hmm.
And how you apply this fundamental, more physical ratio to psychological movement is just beyond me.
But it implies,
The universe frequency.
Yeah, that's what it is. As Hank said, it applies to everything, even the energy of thinking. The human psyche is
that's
built
just
in those ratios.
The golden ratio.
Yeah, the golden ratio. Yeah.
But I still have here an example, Mike, of a beer spread. as
Okay.
a case study. You want to see it from GM?
Yes, please. Yeah, absolutely.
So this is from a backtested comps, and you have been speaking of changing credit spreads into a butterfly. So first batting down the hatches, then a butterfly, and I was thinking a bit further, and to make not only a butterfly, but to also sell spread below. So basically you get iron condor. See, and that comes from a backtest from 2019. And here you see clearly that's a loss. That's the 29th. Entry was, wait, that's the opening here. You see, opening, then we go to the 29. And this is the.
You didn't get your back test state. You have to hit go before you do anything else. Yeah, there you go. And then hit go first.
Yeah, so this is on the exits, and this was above the break even, and we had a loss of 492, around 50%. What did I think of? So make a credit spread here, and then selling make a butterfly here, and selling a credit spread below. So I did that in the next one, and it's oh, it's gone. Oh, this is what? 1 second, I have to find it back now.
No worries. I see that a couple of you have your hands up. We're going to get to you next. I see you.
Here it is, because I lost it. I clicked it out instead. So we go to the 28. So this is the start of the same trade, same price. So potential credit of how much we have here?
162.
15%, and then we have here 89% probability of profit. So what happened? We went to the 28 again. Here, and what did I do? I made a butterfly of it, a butterfly, both sides the same. And as you see in the chart, there is still 1 day before earnings. So it's close to good because I neutralized it a bit, and also waiting for the next day when the earnings come out. So if you go to the next day.
No, IV is going to come out and your Vega is going to help.
Yeah, indeed. So if he goes up, but no, I have another little problem. It shoots a bit up and it's next to the next break even. So what I do is here sell a credit spread, a call one, and I did that on the 29th.
You sold a put credit spread, yeah.
Yeah, and this credit spread was around the place where the trade entered. You You see, you remember from iron condors, you start with 2 wings, and if you adapt to if it goes to the break even, you can do the 50%. That's basically that idea. And then we continue to the 15th. To the 15th when I exited it. Well, wait. There you see the whole trade, and instead of losing 400 and so on, it's a profit of 210. And this is what you get. This is the iron, this is the butterfly, and this is, you could say, a part of the iron condor. But what's the good thing about? You are neutral the day before earnings, and when you add a wing here, a credit spread, the broker doesn't charge you because you already have 50% on in the butterfly. See? See, only 1,000. And the other trade, how much was that? 1 second, I have to find it back. Here it is, 996 was the margin.
Yeah, so you kept your max risk around the same.
Yeah, and we pulled in double credit, a good credit at the same time. See, so no more risk.
You got in a street fight with this trade and won. Credit spreads, boom.
Yeah, iron corner. Yeah, and that was the idea which came up because normally batting down the hedges would mean half of the spread when they start. You break it down to half, you break it down the other one, you mirror half of it, you have a butterfly, but your potential goes down too. Here you keep your potential, and at the same time, when you add the credit spread, you get more. You see?
Yeah. So yeah, I like it. I like it.
Forward.
Yeah, the thing that this worked, and that this worked doesn't validate. I mean, I'm not. It's not. It's a. I like this strategy. However, that it won doesn't absolve any of us from the possibility that the stock tanks. So I want everybody to be careful about deriving conclusions on one trade. I like this adjustment. I've seen other variations of it. And I like it. And I know that you do these, Bernard, and they work well, and you have your own system, and thank you for sharing it. But the main point I want to make is there's no limit to the ways you can adjust trades. Yeah. And I like that we're sharing it, like Bernard and other people have shared the Glenn Hageman effect. You know, we have a lot of contributions already, and you know, I like for everybody to keep these coming. It gives people more options.
Yeah, one thing I wanted to mention too, if it falls, which can, it still can go up, but then you can make a broken wing butterfly of it. Because if you look at it, you can change it here. That stays in play. You can play here if it goes up fast or down. See?
Yep.
It's adaptable, the
whole thing, yeah.
Yeah.
You can throw another bear call spread up top.
But the reason I'm only taking this preferably because it's for the risk. I don't go above my initial risk nearly. See?
Got it. Yeah.
You know where you stand and you stay there because it's easy to double and to triple it. But it's better to keep the same and still make the normal profit, because normally I only take off 50%, as you know. And that would have been $100, but because I take more risk here, I take off the double, and it's coming out of the trade from itself.
Yeah.
And that's taken from, I had 3 losers in 51 in a batch of 51 back tests, and all 3 they perform like not the same, but they all go from loss to profit, and that's the main piece.
Yeah, that's the main thing. Beautiful.
Yeah.
One quick idea for you. If you look at your 34 or 33 put spread that you sold it for 3 cents. So you got $18 for that spread in exchange for 6 times 82 of risk. So the question you got to ask yourself is it worth it to pull in another $18 for the trade? I mean, you want to make sure if you're adding credit that you get enough to make it worth it. So that's one comment I'll make. And the other would be, you could also, I know you want to, I like that you're keeping your risk capped, but you could also say, I'm going to sell 3 put spreads underneath instead of 6 and 3 call spreads up top instead of 6. And that way you're distributing your risk better.
Yeah. And you would get more too.
Yeah. Hey, Bernard, I gotta cut this short because I've got a session in 15 minutes and we got a couple more questions. But I like this, man. This is great.
Yeah,
Thanks for sharing, and more sharing increases our collective consciousness and knowledge.
Yeah.
So this is great.
But the idea was to perform it like I had in my mind theoretically. So no, you can fine tune it and can do some back tests on it. Huh?
Yeah, man. We'll
See
talk
what
about that
works.
on our call coming up.
Yeah,
I'm sure.
that's the purpose.
Yeah, thank you. Thanks for sharing, man. Appreciate it, buddy. You ready to start trading again?
I'm busy, but already a week, but it's not so easy to find trades now, huh?
Yeah, they're not as plentiful.
Yeah.
Although the
you
Zoom
have to
trade's
watch
pretty
it.
good. All right, I'm going to get to Glenn and Francis. If I could get you guys to share rather briefly. One thing I promised that I didn't do today, and because I forgot, was Glenn. And Glenn, if you want to chime in here, come on in. Glenn made last week, Glenn distinguished this, put the butterfly back in the cocoon adjustment. It works really well if you got profit. And we did it. We did it last week on the XSP. We guaranteed a profit on that winning broken wing butterfly. And it's a beautiful adjustment, one I had never thought of. And then Johnny said, well, how can we back test? Glenn, he was asking, well, Glenn, how do you do your back testing? Any comments on how to do back testing? And then Glenn made the comment, well, maybe the power is in the collective here, our mastermind, and maybe we as a team can do back testing together, divide and conquer. And I was like, what a good idea. So I want to talk about that, although tonight I don't have time. We've gone an hour and 37 minutes, and I thought it was 4:45. Okay, I got more time than I thought. So Glenn, come on in. Let's chat a little bit. I know you want to ask some questions or make some comments, but maybe you can have a quick word about what you think about the back testing idea.
Sure. I want to ask you about a trade. I guess I'll go over 3 things. So I've got a trade question. I'll make a comment about the cocoon, and then I'll talk about the items that I posted yesterday about cloning folders. So the first one, about cocooning, it's exactly what Mike and I think somebody else mentioned. It basically locks your profit in at that time and gives you the ability to see the trade through the end if you've got profit that you can garner over time. It locks in. If you've got a $200 profit, it almost locks you in at that $200 profit and lets you go to the end of the time frame on the risk graph. So if you lock in a negative, you don't have any way to try to get that back. So I just want to throw that out there. And also, if you've got 10, 20, 40 contracts on, it might be cost prohibitive to cocoon it because it's going to cost you 30, 50, $100 to put it in the cocoon. So just a couple of things to keep in mind on that. But when you were looking at that red trade,
hold on, Glenn, hold on. I can't let that stay. That's true in some broker platforms, but not in others. There's other broker platforms where your max commission would be $30. There's brokers that there's one I know of, Tastyworks. They charge you $10 max per contract. They charge a small fee as well, but they don't charge you to close. So there's ways around the commission. I don't want anybody getting choked by commissions. Our Canadian friends have a problem in that Thinkorswim is even more expensive, and there's no Tastyworks up there yet. There's no other alternatives. There's other platforms that have good commission rates as well. So don't let that stop you, everybody. You can solve that business problem by finding a broker that charges less, and there's tons of them. Well, there's at least two of them that I know of. One I'm using.
Yeah.
Yeah.
Absolutely. I just didn't want people to go in and throw something in a cocoon and have a bunch of contracts and end up losing money instead of thinking
Yeah,
that they were
and
going to lock in some sort of profit.
Yeah. I stopped doing them on Thinkorswim for that reason. I was paying 400 in and 400 out. It was nuts.
Yeah. So
Yeah.
when you were going through that trade earlier and you had a $400 profit on, I think it was on your adjustment, to me, that would have been the perfect time to cocoon it and then put broken wing butterflies on both sides and dare it to go out of the cocoon.
Mm-hmm. Yeah.
I mean, to me, that's super powerful.
Yeah, I agree.
So I'll kind of end that discussion. The next one would be talking about the back testing. And I kind of went through I do like 3 or 4 variants of back tests. So I try to keep all the original trades the same. And just if they go over the break even line, that's one, you close it out. The next variant may be to contract and then close it out if it or let it ride after that. So I'll do 2, 3, 4 different variants. Put a broken wing butterfly on top would be another one.
Mhm.
So long story short, if I had 50 trades, I couldn't copy a folder. So Jay had talked to John. John gave me kind of a backdoor way to copy a folder to keep it intact, all the trades. And then on the copied folder, I can run variants, and then I can see what my performance is.
So are you going to show us?
Does that make sense?
Yeah.
Well, I don't have that queued up and ready to go. I've got one more
Teaser.
question for you.
He's a teaser.
I've got
Get
one
us
more,
excited.
one more question. Share this screen. So I put this trade on 3 weeks ago, and my prognosis was XLF is hitting the upper side of its resistance, and I expect it to come back down into the profit zone of the butterfly and start making some money.
Mm-hmm.
Well, I would like to know some math or kind of understand from your side. This is what happened 2 weeks later. The stock comes down, but I never really get into a profitable position because it came down too fast, A.
Right.
And then
The
B,
IV rushed.
the IV went up. So I remember when we first went through the hedge fund mastery, there was always that profit at red risk curve, or whatever we talked about looking at these trades. And you can see at the very beginning, if my profit came down to the red risk or the center of the red line, it's well in a negative spot. So the only way for this trade to have made money is if it ends up in this area towards the end of the trade.
That's the same for a wing one as well. I mean, these don't make money unless time comes out of them. So this is a theta trade, positive theta trade, and that's always going to be the case. You're in a less advantageous. You lose more temporarily if the stock drops hard like this one did. And if it was a bullish trade though, you would have not lost this much because the IV dropped versus rose. So it starts off already. This certainly meets the minimum of the maximum, which is -$5 at the short strike. And then that gets worse if the stock drops. It pushes the color lines out. But always that's the case, that butterflies don't make any money unless time comes out of them. It's a theta trade for the most part.
Well, so would it have been more advantageous? I mean, obviously now, but I guess now I look more for the red lines to curve over I'll call it the right side of the timeline, but
They're not going to be, the red line won't be on the right side of the line on inception. Now, if you want to tighten that up, you can in the scanner. There's a setting for it. If you want to say, I'm not in, I don't want to, I want my red risk curve profit to be -4, -3 or 2, you're not going to get 0 on these. You can tighten it up.
okay.
Now in
I just
practice,
didn't know if there was something that I should.
go ahead. Sorry.
I was going to say I just didn't know if there was something I should look for, or if the the butterfly would have been pushed down further. Obviously that would have helped, but.
Mm-hmm. Yeah, the one place where broken wing butterflies have a decided disadvantage over bullish is when this happens. When you get a crash, all these red lines got pushed even further into the left, to the left. And so did your purple line at 2 days. You have less profit there based on the IV that's come in. And it's really unavoidable with bearish broken wing butterflies. And at the end of the day, you can manage the risk. Time will win the battle. Time will suck out the value, the time value in the option, the IV, whatever's there will be 0 at expiration. So you'll win the battle by expiration. So while you're waiting for your colored lines to collapse, you just keep the risk at bay, move the risk. On this one, I would have adjusted the day before. When you get a gap down, you get a big down day and then a gap down, stock's at the break even, hasn't crossed it. That's the other thing, all of you don't want to wait for the break even to be breached. That's the training wheels rule. We want to adjust sooner. And so if your prognosis is maybe the stock's going to, well, now I would have a decided bearish prognosis after the gap. And it touched the break even, it dipped below it, man, your prognosis should be below the break even tomorrow. Did happen in this case, might not, might have bounced. And then you adjust. If you have any inkling that you're going to be at max risk. It wouldn't have made too much difference in this case, but yeah.
No,
yeah, I see.
I went ahead and closed it out because there wasn't a very feasible adjustment. So I just shut it down and moved on.
Yeah, good idea.
And that was part of the risk of having such a short term broken wing butterfly, because it was only a 3-week butterfly to begin with. So
yeah. That's the thing. I got hammered on a diamonds trade, and when the diamonds collapsed, 2 months ago, I think it was the first time, and it dropped hard in a couple of days, and I still made money. I didn't lose money on the trade. I didn't make much. I think I was able to adjust my way to a break even or something slightly above or below. I can't remember, but it is an issue. And if you have a choice over bull versus bear, bull is decidedly a better choice because of Vega, because of IV. So thanks for pointing this out. It's really the one thing about broken wings, bearish ones, that you need to be really aware of. If there is a gap down, you're going to be in a position like this. This is a really good example of what happens. And now, but you can still adjust the risk normally. In this case, Glenn couldn't, but you can still handle the risk. But they don't behave as well. They misbehave. Well, they don't misbehave, but they're less fun to adjust, but you can still adjust them.
okay, thanks.
Good job, man. Thank you for sharing. We'll get on the back testing stuff next week, and we'll have everybody at Hedge Fund, everybody. All right, I'm going to have to ask that you guys do quick shares if you don't mind. In 11 minutes, I got to do another coaching webinar. So, Francis, how you doing? Good morning.
Pretty good, thanks, Mike. Yeah, it will be a really quick share. Share the screen. Share the screen. Share. I just for a bit of fun thought on your ZM trade, why not just do 2 broken wing butterflies? We're broken wing butterflies, so just put 2 on and thought, what does it look like?
Looks like Batman.
No, I had to do those manually.
No, I said it looks like Batman on laying on his side. No, 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 no. See? One of his wings is broken. One of his horns is broken.
Just quickly for a bit of fun, bit of a laugh. That's what it would look like.
Yeah, I like it. I might do a few more call butterflies. Maybe add one more to make his hat look better.
Okay.
No, but really, I mean, really and truly though, I mean, you probably want to put a bit more profit in the upper one. And then if you take it down, so if you buy two of those up top, the calls, so you just double up your calls and then take off the last 2 days and you'll see quite a delicious risk graph.
Mike, I did that one with all three.
Can I see it? Can we see it? I'm sorry, let's wait for
Yep.
Francis to wrap up here and then we can look at yours. Yeah, I'm curious actually to see what the composite of those three butterflies on Zoom looks like. Uh-huh. And again, I would do if you change the upper contracts to 2, the upper butterfly 242, and then we get a bit more balance and symmetry, and you got a nice looking sexy beast. Who's a pretty trade then? Nice, nice, nice. I like. Beautiful.
So yeah. You're going in on a credit.
Mm-hmm. 42% potential return.
Yeah.
And you can adjust the wings too.
Yeah.
Can you put that on the board? I like it.
Very good.
Do you know how to do that, John? I mean, Francis?
I'm going to work it out. Yes. I haven't posted before. I'll get to it. Yeah.
Thank you, Francis. Really appreciate it.
That was all just a quick little thing.
Yeah, that's great. Thank you. Andrew.
Another one everybody should look at is Snap. Try the same that you're playing with Zoom.
Yeah. Let's let Andrew share real quick. He's got what Sue was asking for, which is all three of those. But yeah, look at Snap, by the way. Man, good call there, Hank. Almost called you Frank. Hank. So similar to Francis's trade, but a bit fatter.
And in this case, when you were saying 5, 10, 5, I just copied what you said because I did the 5, 10, 5 and 1, 2, 1 in the middle. And we can manage the risk on these. It's gorgeous. Gorgeous. My God, we could go on for hours here. Really good call.
Nice one, Andrew.
Yeah, thanks, Andrew. Appreciate that.
And it's posted on WhatsApp.
And it's been posted.
You're the man.
That's how it rolls, man.
$44 for me if I do that through E-Trade, open and close.
Tasty works. Who said that? Tasty works.
It has
that was
made
a recommendation. The platform's nice for adjusting too. When you adjust legs, you can see your current trade on the option chain, and you can say, "All right, I'm going to sell this one and buy that one." You can see it graphically. It's fantastic. Fantastic. All right, guys and girls, Roberto and I have to go. We got another one in about 2 minutes. We got to get on the line. So great call. This is our last one, and we'll do more of this. This doesn't go away. It just gets incorporated into the Hedge Fund Live group coaching, which is tomorrow. But this time next week, this isn't present. We're not going to have this, but we'll do more this and hedge fund trades next week on Thursdays. So no more snipers going forward. I got a slide just to also tell you all. I worked on the slide, so I'm going to show it. Not this one. Now, you know about the lifetime discount for the earnings mastery. I've been talking about that. You got emails. This is same as snipers. Live trade group coaching for earnings. We've got a winning trade on GameStop already. So it's really Surge Strike essentially live. Oh, I don't have the slide. I thought I had it. I'm sorry. I'm in the wrong presentation. Anyway, the point I wanted to make is that we're not doing anything on Monday. It's a holiday. No markets are open. So Monday's a day off for everybody. So if you have anything on Monday, we won't be there. So please take a break, have a good holiday, and we'll see everybody tomorrow night anyway, right? 5 p.m. for Hedge Fund Group Coaching. Is that right? Yeah, it is. Okay.
Yeah, Thursday. Thursday.
Roberto, is that right? All right, that's right. Okay, good.
Awesome.
right,
Thank you,
everybody.
everyone.
Yeah,
night.
thank you. Great call.
Thanks.
Much love. See you soon. Bye, everybody.